My name is Michael Duke, and this is the show where I cover stocks that are interesting. So if you find that interesting, then please consider liking the video and subscribing to the channel. Today, we've got a couple pieces of news that I want to kind of collectively discuss. Company that I covered on the channel really only about a month ago, maybe 4 or 5 weeks ago, Prologis, the real estate investment trust that is the largest industrial landlord in the world, with a very, very large portfolio on the West Coast of the United States and worldwide. They released earnings today. I want to discuss that and how it impacts the outlook of the stock potentially. But I also want to kind of wrap that in the news of the day, given that the markets again today are being rocked by an increase in escalation of the trade war between the United States and China. I also want to take a look at the Prologis earnings release and give my thoughts on it, as well as just take a look at some top-down market data. So let's get started. So first off, this news broke this morning that now Trump has elevated the tariff rate to 245%. It's not, and as this piece of news that we're looking at here on Seeking Alpha shows, it's not necessarily blanket tariff rate, as far as I understand, refers to some goods and combine new fentanyl and reciprocal tariffs with existing 301 tariffs that already exist. So obviously, we've been in this paradigm now for 2 weeks with an elevated tariff rate gets announced. And typically what that's done is stocks sell off, gold gets bid up, and bonds are kind of iffy. We don't know where bonds are going with throughout all that. But for the most part, they've sold off as well. And I'm talking about United States Treasury bonds and notes and whatnot. So that's kind of the stage for today being set, that we have new tariff news. And as such, all of the major U.S. indices are selling off. The S&P 500, again, in a sharp, 2.32% sell-off today. The NASDAQ faring worse. The only sector today that is in the green is energy. Again, utilities, consumer staples, healthcare, outperforming again versus the index. Basic materials as well. That's something I want to talk about in light of gold. We see here that, pretty mixed across the board, but our stock market continues to lead down, followed by China. I suppose that makes sense. Bonds are hitting a bid today, with the exception of junk bonds. We see here commodities are pretty much green across the board, notably gold and silver. Silver still lagging behind gold. That's a phenomenon that I expect to reverse eventually. I'm not sure when. And then we see here again, dollar being sold, euro. The euro is leading. A couple currencies that are notably missing from this currency list would be the Swiss franc and the Chinese yen. So once again, what we're seeing, and I know I say sometimes on this channel, yeah, I'm going to make a video about this and that, and I end up getting distracted with something else. So I'm not going to promise that I'm going to make a video about the metals trade. However, I have been pretty quiet the last week. This is the first video I'm making in 5 or 6 days, and because what I've been working on is analyzing the metals trade. So that's not as much what this video is going to be about, but I think it's notable to acknowledge that, again, gold continues to be the leader on days when stocks are selling off due to tariff news. And then Bitcoin is outperforming stocks, but slightly in the red for today. So where does that take us with Prologis. Well, Prologis, again, I covered this. I wrote about it. My article here published March 16th. That was exactly a month ago today. We have had our markets turned upside down in forward expectations since that time. And today being the earnings release, I really want to talk about Prologis, both from the standpoint of giving a renewed analysis of it, but also through the context of how the Prologis as a stock and their earnings, both retroactively looking and forward guidance wise, are really good indicators for what the trade war is doing to markets. So Prologis, even though it's a huge company, somewhat focusing on the micro of their little world of the industrial real estate. Again, as we covered, this is their investor deck released in March that we took a look at. Just want to reiterate what the tailwinds that Prologis has been benefiting from over the last 10 years. We have basically what they've done is benefit from the Western Pacific trade. Okay. This is a visualization here of their business where you have, on the production side, you have either a domestic, some sort of domestic manufacturing piece or international manufacturing of goods ending up in some sort of, import center or a, just centrally located national DC. So in other words, this channel here basically is referring to, goods that are being manufactured in Vietnam or China or, in the Pacific, or maybe they're in, to a lesser extent, Europe or South America somewhere. You get the picture, right? So when we take a look at least the US based real estate portfolio, again, if you remember our circles here, our market NOI weighting, we see here with just Southern California alone contributing 20% to their NOI. And then we have this, I believe, is a 5%. But I think it's reasonable to say that a quarter of the NOI exposure comes from the West Coast port cities. We have the Port of LA, Port of Long Beach, Port of Oakland, Port of Portland, and Seattle, right? So it's reasonable to assume that the company is, these footprints here are set up for this channel right here, international manufacturing. So obviously, when we have these big tariff announcements that have been put in place, the companies that are directly impacted, I talked about Republic Services not being directly impacted by tariffs. The companies that are directly impacted by tariffs, reasonable to assume that a lot of those might be customers of Prologis along this West Coast portfolio here. So that compresses their margins depending on how much of their business is based around importing goods and distributing them. So hopefully it's easy to see why Prologis is a company that is, through second order effects, impacted by tariffs, particularly very, very large tariffs versus China, of all places. We wrote our article on March 16th. The price at the close of the market on the following day was $114.44. The stock traded all the way down into the mid 80s. The stock broke through that level and got all the way to the lowest price point since 2020 here. Really right at the heel of the COVID crash. Okay. That's how steeply it sold off, more than, I believe, 15%. The tariff announcement on Liberation Day was much, much different than I expected it to be. I rated this stock a buy, and we're really going to critically dress that down here today as part of what we're doing. But anyways, today the Prologis is up. We saw how the S&P down 2.3%. Well, the SPY down 2.3%. So Prologis is outperforming the index by almost 400 basis points today, which frankly has been rare the last few years for Prologis to outperform. We see how it's traded flat. It's underperformed severely the last few years. So the market really seems to like what they heard from the earnings report. And so we'll take a look at that in a second. But I think we need to acknowledge that this company, again, they are more robust of a company than just importing goods from China, okay? Or having exposed to customers that are importing goods from China. Dallas, Fort Worth, where I used to live, very notable central DC hub for goods coming from Mexico. Mexico is a beneficiary, in my opinion, of tariffs on China. And then we also have the East Coast ports. What we saw in 2021, 2022, there was a big jam at the ports on the West Coast, and the port volumes on the East Coast really, really expanded rapidly. I think as the trade war intensifies and supply chains continue to be volatile and shift, we actually might see volume increase on the East Coast. So my point in saying all that is that it's not necessarily apples to apples to see tariffs on China and for Prologis to just be directly impacted by that. However, I think it makes perfect sense why the stock sold off so deeply on the tariff news. And I think as investors taking a look at the stock, we should critically analyze. So that's where we get to the earnings report today. I think a lot of the community, whether that be shareholders or just investors in general, there were a lot of eyes on the Prologis earnings report today because in a lot of ways, it is somewhat of a proxy for how trade is going on the West Coast. Core funds from operation per diluted share increased 10.9% over the first quarter of 2024, ending March 31st. Just because these tariffs were announced, those aren't going to show up in any of their actual income numbers, right? Because first off, they were announced after the quarter end. It's pretty straightforward, but also because things don't just change on a dime like that. So these numbers are obviously very strong. Core FFO excluding net promote, this is the true number, increased 9.2%. Occupancy, 95.3, ticked down slightly, but nothing concerning. We see here in the first quarter, they deployed $811 million in acquisitions at a weighted average stabilized cap rate of 4.2%. That's not their entry cap, that's their exit cap that they're underwriting to. So take those numbers with a grain of salt. However, if you're familiar with real estate, you do know that 4.2% is exceptionally low, and it is lower than the 10-year treasury right now. So what that should mean in theory is that the assets that they acquired are at the top core plus A plus level of quality. However, this is essentially an underwriting metric as far as I'm aware. Then here we have development stabilizations, meaning developments that were, the buildings are not just complete, but they are leased or partially leased to the point where they can rotate into the stabilized capital base. We see here that they are achieving or they estimate to achieve a weighted average yield of 6.9%. So to see, you want to see a spread here that's several hundred basis points over the equity yield after the stock sell off. I think our equity is trading around 4% dividend yield. So that's, almost 300 basis points. That looks pretty good. And then we've got here value creation of 240 million. 65% of that being built to suit, roughly 2/3, excuse me, which basically just means that it's less risky. Development starts or developments that they outlaid the capital to get started. They're projecting an estimated weighted average yield of 6.6%. Yields are compressing a little bit on new starts. I'm not going to opine on what that means at all because it's not easy to do so. And then here we have dispositions and contributions. Dispositions mean property that they sold to a third party. Contribution means property that they dropped down in some sort of JV entity where they still have equity in. And the weighted average stabilized cap rate of the dispositions and contributions, that is a real number, being 4%. Again, exceptionally low, lower than their dividend yield. But yeah, so they sold or dropped down 118 million. Pretty normal quarter of activity, I would say. They did issue 549 million of debt at a weighted average interest rate of 4.1%, a weighted average term of 8 years. Again, one thing we talked about in the prior analysis, rather, was that one of the advantages of a REIT as large and creditworthy as Prologis is their ability to issue debt at very, very low interest rates. I can't get a mortgage for 4.1%, and I'm sure you can't either. So you get the idea. So total available liquidity, meaning cash plus revolver debt, I would assume, being $6.5 billion. That's quite a bit. You see here the weighted average interest rate being 3.2%, with a maturity profile of like 9 years there. So you do see that the debt that they are issuing is inching up over their weighted average, which not great, but this is still a below market interest rate for the average industrial buyer. So this is really important here. We see the 2025 guidance. Previously, they guided to all these numbers and they reaffirmed these numbers. In other words, what they're saying is we're not seeing anything in the market that is causing us to deviate from our financial projections for 2025. So I think that is the thing that the market is looking at, and they're giving their stamp of approval, and the stock is hitting a bid today. Okay, so that is what's going on there. That's just, I believe that just refers to like debt that they're placing instead of fee simple on a building. They're placing a debt or something. They're projecting the same amount. They are nudging up general and administrative expenses, by 10 million, plus or minus, drop in a bucket. This is the kicker here. So initially they had guided to 2.25 to 2.75 billion of development stabilizations and the same amount in starts. And you see what's going on here. They're guiding down, and not just a little bit. This is 30 to 40% there, but you get the idea. They are planning to spend the same amount of money on acquisitions, which should tell you that they're seeing more profits in existing inventory that they can acquire, and perhaps it's partially leased or fully leased. They're seeing better ROI on that type of investment activity than they are on developing new buildings. And then here is the big kicker: contributions. Again, that's where they're dropping down into a JV or some sort of SPE. So that is pretty notable, I would say. And they're also saying realized development gains. They guiding that down significantly, 3/4 to a half. So my interpretation of those numbers is that they're basically saying like they don't want to outlay as much capital as they planned on doing. And of course, we know in the real estate business, the way that you make money is by outlaying capital. It is the OG capital intensive business. And it's all about the cost of money, the cost of debt, cost of equity, everything. So, what I'm seeing here is somewhat of a tightening of the Bank of Prologis, right? They are scaling back their plans to outlay capital. And we're going to talk about why that might be here in a moment. But this piece is not only do they plan to not deploy as much capital, but they plan to not recycle it as much either. They plan to not sell as much stuff. They plan to not drop down as much. Okay. So that could be indicative of a few things. That could be indicative of they're not going to achieve the spreads on an exit that they need to in order to exit. In other words, exit cap rates could be coming up, and spreads on new construction could be coming down. Both of those things shouldn't really happen at the same time, if I'm thinking about that correctly, but it could be one of those things, or maybe a little bit of both to differing degrees. Really, what that probably indicates is just general uncertainty around things. And it means that they want to hold on to a little bit more liquidity. So, what happens in your household financially when you're a little bit more uncertain about the outlook of your job or your business or whatever, your financial picture is a little bit more uncertain? Well, what are you going to do? You're going to save a little bit of cash, hopefully, if you're doing things correctly. And that's what Prologis is doing. That is echoed by the comments of the CEO and co-founder. This is what he said. We delivered exceptional results, which they did, signing leases totaling 58 million square feet, breaking ground on new build-to-suits with strategic customers, and expanding our power capacity to support the growing demand for data centers. The CEO said, in the near term, policy uncertainty is making customers more cautious. But over the long term, limited new supply and high construction costs support continued rent growth. We're confident in the strength and resilience of our business. We operate with a fortress balance sheet and ample liquidity to navigate any environment. We're ready to move quickly as opportunities emerge. Management is saying, hey, we're going to continue to invest. We expect to hit our numbers this year, but we also are going to hold on to it. We're going to hold on to a little bit more of our cash because we don't know what's going to happen. And we do expect pricing to perhaps soften on acquisitions. They're saying, hey, we expect to outlay the same amount on acquisitions, but we don't want new developments as much. So I think, again, I understand why the stock would trade green on a day like today, because they're basically signaling, they're basically saying, yeah, we're going to hit our numbers. In other words, the price of the stock should, essentially be the same. However, I think that we should pay close attention to these numbers here. I hate to use the word canary in a coal mine because that's a lot more drastic than what I'm trying to describe. But the idea of what I'm trying to describe is this: they're not like refusing to give guidance. It's not that uncertain, but you are seeing how the tariff news is kind of starting to freeze or tighten on capital markets, and these numbers are evidence of that. So let's talk about data centers. So this is also in the news today. It has been in the news for some time. Really the last few weeks even. The trade of 2024, the story of 2024 was artificial intelligence infrastructure, artificial intelligence build out between semiconductors, data centers, and the like. So we discussed in our prior analysis of Prologis how there was a tailwind there. there was a tailwind between e-commerce. There's a tailwind in onshoring. There was a tailwind in AI infrastructure. Well, now what we're seeing is the environment is flashing a few signals that the tailwinds of e-commerce are up in the air. Those are highly uncertain, and those might actually become a headwind, even if it's short-lived. And then we're also seeing that the AI infrastructure piece might also be somewhat of a headwind. In fact, one thing that I didn't do here that I will do now is look up news on NVIDIA. We see NVIDIA here. We'll come back to that. So the onshoring narrative, however, continues to potentially be a tailwind for the stock, especially in light of tariffs. If companies need to onshore their manufacturing, to elsewhere, aside from China, well, Prologis actually is in prime position to benefit from that. Will they benefit more from that over here versus what they potentially stand to lose from less AI build out and less, all the trade uncertainty? That remains to be seen. But I do think that the picture, the near term outlook for Prologis, I do find significantly different today. And that's why I want to talk about NVIDIA. So NVIDIA probably dragging the index down quite a bit. We see the market, recovered 35 basis points since we looked at it 10 minutes ago or wherever. However, of course, NVIDIA is one of the top 3 companies in the index. Trading down 9% today, all the way back down to $100. Again, both of these articles on Yahoo Finance. So the reason for the slide in NVIDIA stock today is that there were chip controls enacted. Government surprise new controls on semiconductor exports to China. They said that they were going to take a $5.5 billion hit. That was late last night. What I am going to say is very straightforward, and this is negative news, bearish news for the AI infrastructure trade. It's a short-term signal. I do believe that this AI and robotics story, we're in the early innings of this playing out. And, there's huge tailwinds there over the long term. But what we're seeing here is we're kind of experiencing some growing pains in the AI infrastructure trade. So this news is hitting today. And then we have this news here. This headline is maybe a little bit more alarmist than it needs to be. Microsoft's huge plans for mass AI data centers now rapidly falling apart. And yet another sign that tech giant Microsoft is getting cold feet about overinvesting in AI infrastructure. The company has abruptly paused work on data centers in Ohio. Okay. This is relevant for Prologis, of course, being that Prologis is, working on this. But it might be reasonable to suspect that Microsoft is the customer here that's scaling back these plans, and that's actually directly impacting Prologis. So while I don't know for sure, and I probably could easily confirm, I'm not going to do so because I don't want to slow us down here for the sake of time, but probably something to investigate that how that's directly impacting Prologis. But again, let me just bring it back around. The idea here is that Prologis has tailwinds and has experienced tailwinds from really the Asian Pacific trade. The thing that Trump is trying to clamp down on right now and impose controls around is something that Prologis has benefit from over time. So that's causing uncertainty and weakness in the stock price. And then we're also seeing news like this, and with NVIDIA, news like this. And I would add guidance like this, despite the fact that the stock is green today, we are hitting a prior level of support. Will we break back above 100? I'm not sure, but I will say that, and I am going to write a new piece of work here with a little bit more focused thoughts on the company in particular. But I think what this means, at least for my portfolio, is that I can no longer have a buy rating on Prologis, because I think that there's a lot of uncertainty and weakness around the near term outlook. And I think it'll take is really a couple quarters of prolonged and protracted gridlock on these tariff negotiations for the stock price to continue experiencing greater levels of weakness. However, that being said, the value proposition in the stock is still there for the long term. So I'm downgrading the company from a buy to a hold. Obviously, it's at a much better valuation now than it was when I made my call more than $10 a share, more than 10% ago. But one thing that I like to focus on in my portfolio is I don't like to overweight my portfolio with names that are experiencing a lot of weakness right now, because when you do that, your portfolio also experiences weakness until that subsides. If you're okay with that, then that's one thing. But that I do want to consistently outperform my benchmark. So therefore, that's just a fancy way for saying I expect Prologis stock to be volatile over the next several quarters. There are going to be many opportunities to buy it. However, I would like to see a little bit more certainty and see the story play out here a little bit more. So I'm going to downgrade Prologis to a hold from a buy. It's still like best in class REIT thing. However, when it comes to real estate investment trusts, Prologis actually arguably is probably going to underperform the real estate sector. I haven't sold any shares of it that I've accumulated and don't plan on doing so. But I am downgrading the stock from a buy to a hold, because I can't in good conscience say that now is the confirmation point. However, I am very encouraged by the fact that they're keeping their guidance here. So we'll just have to see. This is something that I think the earnings reports here of the stock are going to be very relevant indicators of how the trade war is impacting a lot of customers at once, not just one particular one. We obviously see how Nike stock has done very poorly in the news of all this tariff uncertainty. That's a lot more concentrated, whereas Prologis a little bit more diversified amongst many customers and probably a better proxy for the more macro level view of how the Asian Pacific trade might be impacted by Prologis. So I'm downgrading the company, and hopefully it makes sense why I'm doing so. I want to see how things shake out here, and I think it also goes to show. This is worth reiterating here that overweighting your portfolio to one particular name is what generates wealth. It's also what generates drag. So, for instance, if you happen to overweight your portfolio to Prologis over the last several years, maybe you feel the need to continue to do so. But what I'm trying to say is that position sizing is very, very crucial. And I do believe that we are entering a golden age, for sure, a golden age of stock picking. This is a stock picker's market. And the reason that it is to avoid areas of the market that are highly sensitive to this really uncertain macroeconomic outlook that we have right now. And so I think that picking the right stocks that benefit from the uncertainty or are otherwise resilient in the face of that uncertainty, of which Prologis could be, are very relevant. However, I expect the price action in Prologis stock to be highly sensitive to tariff news in the go forward, today being the exception, given the way that they reported earnings. So anyways, that's going to conclude the video today. Well, actually, no, sorry. Let's just do a quick charting here just to illustrate the point. But This is one thing that we discussed in the prior video. And it also happens to be pretty much where the price is today, right at this $100 a share mark has been a level of support. We saw here that the company traded down through that level, and that's a big deal, okay? Because that level has held as a support line going all the way back to when it broke out to new all-time highs here in about June or so, 2020. So that's a really big deal. If on the tariff news, it were to sell all the way there and recover from that, start to recover, that would be a lot more bullish. But the fact that we traded all the way down, I believe it was like 85, 86 very briefly on April 2nd or April 3rd or 4th. While if you would have bought shares at that time, you'd be up in excess of 15% today. Not bad. I think it is worth noting that now we're nudging up against the line rather than down and potentially bouncing. So it is conceivable to think, even though we're having a strong trading day, that within the next few days, if we do not break above 100, that we might be in a new range down here below. So that is another reason for the hold. We got to see how this shakes out. Frankly, if it goes down into this range, it'll become a lot more appetizing. But until then, I think that where we are now is just it's a point where we really have to wait and see and just be patient. Be patient again, because this is a really excellent company, and hopefully, if you have shares of it, you've accumulated them at decent prices like I have. I am down on my shares because I've basically been accumulating, in this trade bound range, right? But anyways, the technical analysis definitely, very simply put, I think it gives a lot of weight to why we should be patient. We shouldn't panic on this name, but definitely, I think we should have some patience. And there's a little bit more of a muted stance to take here in the name. So anyways, that will conclude the video for today. Hopefully you found this enjoyable and educational and instructive to your own portfolio construction. Let me know how I'm doing. Leave a comment. Again, consider liking and subscribing to the channel so you see more analysis. If you like my style and like the way that I approach this, then would love to see you again. And I appreciate you for watching the video. So thank you again. I hope you have a great rest of your day, and I'll talk to you soon. All right. See ya.